Chinese customs now have said no more H200, which we would say is in spite to get back at Trump. That could cause some pretty big problems.
Very bad news for Nvidia in itself, and obviously the tech sector and the whole ecosystem that lives in and around.
We have Trump effectively trying to buy Greenland and take over Greenland. That may result in him leaving or being kicked out of NATO.
They're supposed to pay a percentage of their GDP in defense costs to support NATO, which they hadn't paid the full amount for years and years, and yet you've got the German economy roaring away.
Anyone who disagrees with the deal is going to add 25% to their tariffs, just like that.
Yeah, buying some protection right now probably is not a bad thing. China, which for the last 25 years has been totally unchecked by the West in terms of expanding its economic and military interests around the world.
Fed Chairman Jerome Powell's done a really great job, I would say, over the past few years since COVID.
Hey guys, welcome to this week's Money and Investing Show. So here we are, 12 months into the Trump presidency. What's going to happen with Greenland? Are we going to see oil prices fall? Will there be a war in Iran? And what's going on with China? There is a massive amount to unpack. The key thing here is making sense of something that's been pretty crazy over the last few months. As always, don't just take notes, make sure you take action. See you in the show. Hey guys, welcome to this week's Money and Investing Show with me, your host, Andrew Baxter, and as always, my offsider and co-host, Mitchell Olarenshaw.
Good to be here, Mr. B. Well into 2026, and gee whiz, tough to keep up at the moment. So I thought we better do an episode for our listeners out there because I want to talk all things Donald Trump. President 47, the shakeup that we've had, the policy shifts, the moves. It's had a big impact on currency and stock markets, which is really where we want to get to in this episode.
Definitely. It's certainly been a presidency with a difference. And of course, 45 and 47, second term. And I thought the first few months of the presidency reflected a little bit of maturation in policy and people around him. This last couple of months have been quite hard, even for someone like me that's right across geopolitics to keep up with it. It's certainly been a whirlwind, but we'll pick them off and see if we can make some sense into it, but most importantly, make some dollars for the clients.
That's it. And look, selfishly speaking, for my clients and I, as you know, market's not far off record highs. So it's been a great time to be trading. If you're long the US dollar's been really strong as well. From a news flow perspective, it's a little bit confusing. So I think we break it down one by one to go through the issues, or the non-issues for that matter, as to what's happening. Let's start with Venezuela, shall we?
Yep. Okay, well, we alluded to this actually last year when we did the outlook. They had the US fleet anchored off the coast, and Venezuela obviously has significant oil reserves, and one of the major platforms for the US economy is lower energy prices. We talked about the fact that they're pumping and fracking as much as they can, but they need more. They need OPEC to produce more, and so on. And so they have, disrupted the regime, which is a really tricky path to start walking through. If you go back to the 1980s in Latin America, it was sort of commonplace where you sort of had dictatorships overthrown for more sympathetic ears, etc. I think the agenda is to stabilize the country, first of all, because the people have been long suffering under the dictatorship that they were. Well, they had an election, but whether it was rigged or not is another matter. Under the environment there were a vast quantity of immigrants leaving from Venezuela. There's embargo on the energy, so the energy's all locked up. And this notion of energy being locked up and embargoes is a very subjective thing. So if you take Russia, which has been subject to sanctions and not able to export oil, it has been exporting oil to the nth degree. It's been exporting it to China. So once again, China's in a situation where it's able to buy illegal oil significantly cheaper, to have lower cost energy to put into its economy to continue to be even more competitive. And I think America's had just about a gutful of it. And they've gone, well, if that's the game that's being played, we'll do the same thing. And if you look up ghost oil tankers, if you're someone that wants to look at what we're talking about here, you'll see that Russia puts their oil on a tanker up in the west coast, up in the Arctic Circle, bring it down to China, the Sea of Japan, swap it over onto a Chinese tanker, and then port it into China like that. And there's hundreds and hundreds of oil tankers doing that. So, they're going, okay, well, we need access to cheaper oil too. This could be a way for it. And if the trade-off is a more stable and better economy for the Venezuelan people, that's a good thing. Certainly, a big piece of military action, albeit no deaths to U.S. service personnel, and I guess reflected the U.S. position as the dominant global force in the military space on the back of last year's bombing of Iran, I suppose you could argue. Where does it go? It's a really messy one. You can install a puppet government. I don't think that's the answer. having a more sympathetic government in there certainly would help. And if the US is able to oversee some level of stability, there's hundreds of thousands of people have gone missing, been tortured, murdered under the previous regime. It's not been good.
It's not good.
No.
As far as I understand, the Venezuelans are actually quite happy that it's happened inadvertently. For the average consumer, though, listening to this, AB, the impact is we should hopefully see lower oil prices, which is really a natural tax on every consumer.
100%. Like lower energy price is good for everybody. Why aren't energy prices lower? Because oil particularly is controlled by a cartel, one of the few legal cartels in the world, being OPEC, that decide how much they want to pump. So they've been able to artificially keep prices up. We've seen them come down from 85 to about $65. And I think the goal from Trump 47 is around about $50 a barrel, which would be massive in terms of it being a deflationary thing across the globe, but particularly for the US. And deflation and lower energy prices are a good thing for everybody, because we'll wear the brunt of that, whether it's higher food prices, higher costs of production, higher transport costs, higher everything. So that's where they want to go. Look, the Venezuelan oil it's actually got quite a high sulfur content. It's not the best quality, but nonetheless you can be using it, and I don't doubt that it'll be going to a good home north of the border.
Now, the counter to all of this, of course, for the oil market specifically, and for us as the consumer at the Bowser, for example, is Iran. So we know that there's been civil unrest in Iran, which is one of the world's largest oil producers. What could be the impact there? Should we start to see this continue?
Also under sanctions, so technically shouldn't be really exporting that much oil anywhere. But
oil prices, as a result, have popped up. They've gone up about 6 or 8% the last couple of weeks.
Yeah, and that's largely around the risk of conflict, I think, in the Middle East. Anytime, if you look through history at the sort of spike meter of risk of conflict in the Middle East, you typically see a run up in oil prices, because if it's a disruption to the area, if there's a conflict, does it spill over into our favorite strait, the Strait of Hormuz?
We did remember the episode. We tried to get the pronunciation,
and everything around that. And so you do find that that rising tide lifts all ships when tensions are there. We might see that air come out of the balloon just a little bit. Again, you look at geopolitical tensions, getting the conflict between Ukraine and Russia squared away and resolved. And look, there's been 47's had some inroads there. It's not landed yet, and it's obviously a fairly complex thing. You've also got two sides that have got their own very, very specific agendas as to the one out of it. But if you were to see that conflict resolve itself, however that resolution may look, I think that ability for Russia to resume legal distribution of oil into the world go some way toward pushing prices down too, which is what we all want to see.
So there's been some claims that he may launch military action into Iran. If that was to be the case, what are your thoughts for markets and for the economy?
War is never good for anything, and it's a great threat to use, particularly given the way that the US has showcased its military might over the last 6 months. If you think about the bombing of the uranium production facilities in Iran, there's no country in the world could have done that other than the US, which they did. So it was a good flex to say, listen, we're capable of doing this. I don't think 47 is interested in getting into a new war. He's traditionally been quite the opposite, a president of not wars and fixing wars, which I guess to an extent makes the sort of Nobel Prize snub all the more sort of galling for anyone that leans that way toward being a Trump supporter. You've had mass executions of people going on another genocide, and yet the West and the big global groups, take the United Nations, for example, where are they in all this? If you've got thousands of people being murdered on the streets as protests, well, where are the UN in all of this? I mean, isn't it their role to try and quell those sorts of situations? Is not happening. So the US is sort of standing by. I don't see them getting involved in a conflict there. It would be extremely messy. I don't see it coming to a good end. I mean, they had a run at it in the 70s at the overthrow of the Shah before your time. And I don't see them wanting to get back in, but the threat of it is enough to bring people to the table. And I think that's the stick and carrot that Trump's been using with reasonable effect. Yeah,
I was going to say it's probably his strategy, right? The whole tariff thing was somewhat of a threat and then dialed down. So we're talking about the UN for a moment. Let's transition to NATO, because at the moment we have Trump effectively trying to buy Greenland and take over Greenland. That may result in him leaving or being kicked out of NATO. What are your thoughts?
Yeah, look.
It's crazy, isn't it? I mean, we've just spoken about two items. We've now got takeover of Greenland.
I think President Trump's view on being part of NATO, he doesn't want to be part of it. It's an organization which I think was extremely important in the post-Second World War era when it started, the North Atlantic Treaty Organization. Its relevance today is a little different for a number of reasons. Number one, it's been expanded massively, and arguably is the reason why there's a war in the Ukraine. Ukraine wanted to join NATO. Russia said no. And the reason Russia said no is that there was an agreement way back in the early 80s between President Reagan and Gorbachev to say there'll be no expansion of NATO any further east, except everyone's forgotten about that. On this side of the fence, they go, no, we want to push it that way. And Russia have said no. That's effectively one of the catalysts for the war in the Ukraine. So Trump doesn't particularly want to be part of NATO. He doesn't see it as being as relevant. Getting kicked out, I think, would be for him boom times insofar as the costs of being part of NATO.
I wonder what that would save the US every year, not being a part of NATO.
Well, I mean, they've taken the view that they've become increasingly America first and more isolationist, and poking around in Europe, and there's a certain irony. Most of the NATO member states, Germany being a really good example, and this was something that came to a head in his first presidency. They're supposed to pay a percentage of their GDP in defence costs to support NATO, which they hadn't paid the full amount for years and years. And yet you've got the German economy roaring away. And the US has had to backstop that by spending more and more on defence to ensure that NATO is able to meet its obligations. And when you look at it, Germany gets its energy from Russia, but is expecting America to defend it from Russia. And it's a bit of a juxtaposition so far as, hang on a second, where's the real ground here? If you want to be defended from these guys, you've got to pay full freight.
Yep.
And you might get your cheap energy. But if you don't want to pay full freight and you expect somebody else to come in over the top and underwrite your defense costs so you can enjoy cheap energy, it seems a little skewed. And that's a very murky explanation, but nonetheless is largely like what's been going on. So the notion of Greenland and NATO, or the European countries in particular, Denmark, of course, which Greenland's part of its territory at the moment, you're going, right, okay, well, we'll kick you out of NATO. And America's like, great, that's what we want.
Yeah.
And I think they'll probably rue that decision were it to go that way. But I think understanding what the agenda item is, and it's not like, okay, here's a map of the world. It's not like sort of Blomfeld in a James Bond film where you're trying to just have this group that expands. On one side of the world, you've got China, which for the last 25 years has been totally unchecked by the West in terms of expanding its economic and military interests around the world. And now you've got a different sheriff in the White House. They're trying to right the ship and get an equally robust position for the other side of that coin, being the US and its allies. And Greenland is very strategic. It's got massive rare earth deposits, as we know. It's also a key to security in the West as well for that part of the geography that it occupies in. Denmark just simply isn't in a position where it's able to defend that, whereas the US could be. Is it something you could arrive at with a more commercial and diplomatic solution? Probably. Is that the approach of 47? Not at the moment, but maybe again, you've got the big threat that comes over the top and then the peel back and the negotiations then start. And for anyone sort of going, well, yeah, but they've got no business being there. China's got no business having control of the Panama Canal either, but it does because it's invested very shrewdly and equally has done that all the way through, the South China Sea by building military bases on atolls. It's encroached on the Philippines sovereign territory. So to an extent, you could argue that there's a screwing of the ledger. It's just a very peculiar path to be taking.
Absolutely. Speaking of threats and peculiar pathways, what about the potential federal indictment of Fed Chairman Jerome Powell?
Bonkers.
Which is Fed Chairman setting interest rates or part of the board, which does, and Fed Chairman Jerome Powell's done a really great job, I would say, over the past few years since COVID. And Trump really doesn't like him.
No, I think one of the great difficulties, I don't have a horse in the race. Some people listen, oh, you're pro. I'm not pro anything. I don't live in I've got a business in the United States. I don't live there. I don't get to vote there. So I'm agnostic on this. Yeah. I also would caveat that by saying I try and look at the facts as they stand and try and make an objective decision around that. So Trump is quite hard to understand insofar as there are some very, very good policies. Yeah. And then there's a really atrocious bedside manner and almost a spitefulness that can go alongside that as well. So Jerome Powell, as we've discussed multiple times in this podcast, has been a pretty decent Federal Reserve chair.
He's got inflation back at target. He's done a cracking job.
His ability to articulate and communicate with markets, which reduces uncertainty, which we all want as investors, has been unprecedented, I think, in terms of just how clear a communicator he's been. He's due to step down. I think it's in May this year. And then I think he gets another 18 months as part of the board, but not the chair with where he's at. So I believe the indictment, or what they're looking to do, is the refurbishment of the Fed's offices. And it's gone over budget, which pretty much anything that's federal, just like any government job here, goes over budget and blows out over time. And his address on how he described to Congress how the renovation or whatever it is has been going has been deemed as being misleading. It's such a long bow to draw. It's like the dude has done an incredibly good job in reset, and understandably, President Trump wants to see lower interest rates for a number of reasons. Cheaper borrowing, better for the U.S. economy, softens the U.S. dollar, which we'll talk about in a few moments, I'm sure, which makes U.S. exports more competitive, and a variety of other economic reasons, property market, all of those different things. They'd like to see lower interest rates. But as we've seen here in Australia with their RBA, if you push to cut rates too much too quickly, you run the risk of inflation rearing its head again. And Powell has dug his heels in on this, and so he's incurred the wrath of 47, and now he's wearing it with, I think, what's really possibly a vexatious litigation case with no real basis.
I'm kind of on Jerome Powell's team.
I think I am.
I really like him.
I think so. Me too.
Yeah,
I think so.
It'd be sad to see him step down. He's done such a great job.
He has, but it's a role that has a finite timeline, and him stepping down has got nothing to do with anything other than the fact that that's your time done in terms of that being a fixed term position. So it'll be very, very interesting to see what happens. I don't think anything will come of it from a legal perspective, and it's just a bit of a blight on what's been a pretty decent career.
Yep. One last item I think to cover before we go into impact on markets is China. So big ticket item lately that we've seen. So as we know, the largest company in the world, Nvidia, which is a chip maker, $5 trillion company. We had some issues with their chips being shipped and exported to China. The workaround was the H200 chip, which was accepted into China. Chinese customs now have said no more H200, which we would say is in spite to get back at Trump. That could cause some pretty big problems.
Very bad news for Nvidia in itself, and obviously the tech sector and the whole ecosystem that lives in and around the bow wave that Nvidia has really created in the AI space. Look, I'd say it's a posturing negotiation tool, like everything in that sort of space. I don't think the Chinese technology is even close to being up to spec for that. The advantages we've talked about before that China have, of course, is incredibly low energy costs, A, because they buy illegal oil, B, because they've been building power stations like Bilio, 220, 230 coal-fired power stations, nuclear, renewables, everything is going on there on massive scale to keep their energy costs down, which in an AI context means you can have less good technology but cheaper energy powering it. Net moves you to the same place on the frontier, just not as efficient as it could be. So I'd say that's quite likely a negotiation point to say, look, we're not very happy about what you guys are doing, and let's sort things out as we can.
A bargaining chip.
And there's a touch of irony there, given that China's made its intention toward Taiwan very, very clear. I've got to correct myself too. I said about China having control of the Suez Canal, I meant the Panama Canal.
Gotcha.
But same. I think. I mean, they've very clearly had their eye on Taiwan for an awful long time with the notion of having unified China, I mean that's obviously a major risk also in the semiconductor space too. So I think it's more posturing than anything to try and calm things down a little bit, because the rate of change in geopolitics over the last few weeks has been bonkers.
Yeah, I mean, all in all, when you listen to it, it's a lot of posturing across the board, isn't it, from pretty much everyone?
There is a change of season. There's no question about that. And look, again, not wearing any particular political hat, it probably need to happen because the West has been extremely weak, leaderless, and probably walked all over by China and other countries through that vacuum that weak leadership really creates. Now you've got someone that's not necessarily right, but is a stronger leader. You are going to get friction when that happens. And this has happened through history from time to time, but it's probably needed in order to restore some level of equilibrium.
Got you. One thing I did forget to mention too, by the way, which is really, really important, is the whole Greenland takeover. Anyone who disagrees with the deal is going to add 25% to their tariffs, just like that.
Yeah. So
Don't like it, we're going to punish you.
It's tricky because the European Union is a trading bloc and has also got obviously quite considerable overlap with NATO in terms of member countries. The UK is part of NATO, but it's not part of the European Union, so that there is some variation that sits within there. So if you slap tariffs on say Denmark, really you're effectively slapping a tariff on the EU.
Yeah.
So it's muddy, and again, it's a posturing.
Crazy.
We really want this, and we want you to agree to it. And if you don't, then we're going to give you a bit of a spank. And if you don't like that, well, that's what we're going to do. It probably won't eventuate, just in the same way that many of the tariffs haven't eventuated.
I think my parents tried the same strategy when I was a kid.
What's that?
If you don't like it, we'll spank you, but it's probably just a threat anyway.
Yeah, I reckon you're a tough guy. You'd handle a spank, but a tariff financially, that would get you. You'd bend real quick.
Oh, yeah.
Prospect of giving money away, you wouldn't.
Don't announce that to my mum. She
probably subscribes to this. So it's a very, very fluid time, which is not great from an investing outlook perspective, because obviously uncertainty, investors don't like uncertainty. It can get them to sit on their hands a little bit. That said, like you mentioned right at the top, we've got a market that's close to all-time highs and doesn't really show any sign of abating. This Nvidia news may help them.
Yeah. Let's go through three asset classes. So let's talk about the US dollar, let's talk about stocks, and let's talk about bonds. So first, US dollar, been relatively strong the last 6 weeks or so. What are your thoughts?
Last month, 6 weeks, it's had something of a recovery. Prior to that, the last sort of 12 months, it's been on a bit of a softening pathway. Again, that's a reflection of lower interest rates in the US and the interest rate outlook. And just to put it in very, very simple terms, if a country is raising interest rates, if you hold money in that currency in that country, you're going to get a higher return on it, which prompts demand for that currency, which effectively strengthens it as a price. If interest rates are being cut, people are less likely to want to hold that asset or assets in that currency, and they sell. So that's why currencies are typically weaker when you see interest rates cut. So in the case of the US, we've had a couple of interest rate cuts, and it's been very, very much in the US interest to have a weaker US dollar, because it makes US exports cheaper into the overseas markets, but it also means imports are more expensive, meaning a consumer, if you've got a choice of buying a US good that's slightly cheaper versus an international product that's slightly more expensive, you kind of buy the domestic product. So
looking after your own backyard type thing.
So sometimes a softer currency is no bad thing. That said, as you've rightly pointed out, indications now for interest rates in the US are that the cuts that we were expecting to see quick fire coming into this year, I don't know that we're going to see. Part and parcel of that, we've had some firmer inflation data. I'm not going to say strong, but firmer inflation data. The jobs market has been a little shaky. The geopolitical tensions and an assortment of other bits and pieces through that mix, whereby I think a wait and see before cutting rates is quite prudent. And I'd say if Michelle Bullock had her time over again, she'd wish she'd done the same. Yeah,
we just had CPI come out just yesterday or the day before this podcast, which came in just below expectations, which was really quite surprising. I don't think anyone thought that.
No.
With inflation at target, we've now got the probability of a rate cut in March, which was once at 50%, now down to 20%, so very unlikely to happen. Yeah. We're really looking for June as the first interest rate cut. That's with the expectation that inflation picks back up between now and then, and they're having to cut rates in order to keep things afloat.
Yeah, and I think that's more likely given the current landscape. But there are a few aspects to factor in. Number one, we had this shutdown at the back end of last year, and the economic effect of that is still filtering through, I think you'll see, within the economy, and that may move the pieces of the puzzle around. I don't think there's going to be any change in trend on that. I think we're going to see cuts. It's not going to be anything other than that. But it's a question of how many and how quickly, and pushing it back to give more time to make it happen. As long as you don't run the risk of stalling your economy, and hence the pressure from 47 to cut rates now is there. You don't want to stall that economic strength that's there.
Yeah. Lastly, the stock market. There's currency and bond markets. Stock market near record highs at the time of this recording. We have seen a bit of weakness in some of those big mega cap stocks. So you look at, say, Facebook or Netflix, for example, they've actually been very soft. Nvidia a little all over the show, along with Broadcom and the other semiconductor stocks. But all in all, things are doing pretty well.
There's a bit of corporate news. I mean, Netflix have been sort of trying to get an acquisition away, which is unusual for them. They typically don't buy growth, and this is the first like really major acquisition to buy. Whether that goes ahead or not is obviously in the hands of the powers that be. Whether it gets approved from a monopoly perspective or competition perspective. And Meta, I just saw they shed some more jobs out the door just recently, which is on the back of the metaverse. Remember, they talked about this a couple of years ago.
That was meant to be the big thing, wasn't it?
Yeah, there's the what? No one talks about it anymore.
I don't know any one person that's ever used it.
Yeah, nor were they ever. It was a little bit of a passion project, I suspect, for the firm. I think we talked fairly critically about it at the time in terms of, it's this sort of nice little pretend world that people want to live in. I quite enjoy being in the real world. And I think, most people that have got a pulse probably can relate more to that than sitting with 3D goggles on in your house on your own at home, looking at this pretend world that you don't live in. But
whatever floats your boat, right?
Yeah, absolutely. So, you can understand there's bit of job shedding and whatnot there. And I think, there's a lot of pressure on these companies now to really deliver on the expectations of what AI promised last year. Their valuations ran up very, very quickly, very strongly, unprecedented returns on money. Now it's time to deliver. And this will sort the wheat from the chaff, the pretenders from the real companies. And, we spoke to an extent about who we see as a leader, and Nvidia still is in that space. Okay, the volatility around China is obvious, but it is the preeminent manufacturers of shovels during the gold rush, so it's going to do okay. I think also Google are very much entrenched in that space. Anything and all things Musk or anything in that space, but I think there's going to be a little bit of closer scrutiny on companies like, say, Apple and Meta to see where they're going, because they've been largely dragged along for the ride. I went into an Apple shop before Christmas for a bit of a look around.
Was it crazy and hectic?
No, it wasn't. It was probably the quietest I've seen. This was actually up in Brisbane, and it's probably quieter, and I can understand why, because I spent about half an hour having a good look around in there, and there's nothing I wanted to buy.
Yeah, I feel like they've got so many products now. It's hard to choose. AirPods, headphones,
I've got
everything.
2 lots of pods. We've got a couple of iPads at home. We've got laptops. We've got a desktop.
We've already got it all. What's the incentive to buy?
Well, my wife's just picking up a new phone. $3,000 for a new phone. I actually was in Harvey Norman with my son Jack over the Christmas as well, and we're looking at phones and bits and pieces while we're waiting for someone. That's $3,000 for a 1 terabyte iPhone 17.
I bought the same one,
and like you
crazy.
Think $3,000 you can get a laptop. It just shows how portable things have gone, but also how priced the AI capabilities of new devices are, and that's what's dragged that price up. I also think it's probably dragged up quite a little bit of margin in there for Apple too. So I think you're going to see a little bit of a divergence between the real deal in that AI space, and Google very much is in that camp versus some of the others. But we digress a little bit. But the equity markets certainly have been very strong.
Earnings have been off the dial. I mean, last earnings season was knockout, well above expectations. The challenge is, just to dive into that a little bit more, if I may, we're expecting year-on-year earnings growth in the next cycle, which is upcoming right now as we speak, of 25% year-on-year growth. That's the average for the S&P.
And you got to ask, what's the catalyst for that? You need to have something that's fairly meaty, and because of the overvaluation in markets, if it falls short, you can expect the sell-off to be fairly punishing.
You've almost got to knock it out the park. At expectations or slightly above expectations is no longer good enough.
That said, I think there'll be pockets of brilliance in there. I mean, there are stocks that you don't think of when you think about tech, like, for example, Caterpillar. Now, everyone associates Caterpillar with a maybe not D9. You need to know your excavators and dozers to know what a D9 is.
A single thing,
but the really heavy plant in that beautiful yellow color, and away you go, right? And yet Caterpillar has been on an absolute tear, because increasingly what it's doing is building generators for data centers. That's its new business, and it is printing money. Have a look at the share price.
Which we know data centers too. What a growing component that is.
So these areas of pockets within the economy, I think, are going to continue to be very, very strong, and it's a question of really looking for them. I think utilities, another one that we talked of, banking again, and I think we're in for a property surge in the US too, if we can get the house builders really moving. So,
speaking of banking, can we throw one more news item into the mix, if we may, before we wrap up? So you heard this 10% interest rate cap on credit cards for the next year.
I think there's a level of efficacy for that. And you think about the way that credit cards charge. I mean, I've in a fortunate position. I don't have credit card debt, but if you run over and you're sort of hit with that sort of 17% type of
some
penalty
got to
rate,
22 or 20.
it is unconscionable. But then again, it's also largely an unsecured personal loan, so you can understand why. But in a lower interest rate environment, those rates too should be coming down. And if you can't make enough profit off 10%, you probably shouldn't be lending to people if the default rate is going to be that high. And I think to an extent, I think there's a moral frame around that it's unconscionable fee gouging. And I think that's part of the reason why they've been pushing that.
Not so good for the banks, though. Been watching the share price just come off a little bit. JP Morgan, Goldman Sachs, been a bit weak.
Yeah, they possibly might wear a little bit, but the ones that will really be hit, Visa, Mastercard, Amex, of course, in terms 100%. Of the big providers in that space. And elsewhere in the financial sector, if you look at bonds, bond prices, they factored in interest rate cuts earlier in the year, and we saw the yields drop a little bit there. We've started to see that yield just sort of flatten and ticking up a little bit in a couple of instances too, just which reflects exactly the outlook we've talked to, insofar as rate cuts are likely to be a bit slower before we see anything. So if you look at it from an investing landscape, I think protected longs definitely the way to go. With some of the volatility in the world, buying some protection right now probably is not a bad thing, particularly given valuation levels, and we're just about to go into an earnings season that needs to deliver growth on a silver platter, and if it doesn't, wouldn't be surprised to see a little bit of pain there for people. So a bit of protection probably isn't a bad thing. How do you do that? The options market is perfect for doing that. Tying it back to the almost 12 months now we've had of Trump 47. It's been a wild ride. There's no question about it.
Most of these things we've spoken about in the last 2 months, which is just nuts, right?
Well, you start off with the tariffs and everything that's come from that. In the first instance, and we're starting to see the benefit of tariffs, of course, in terms of the foreign investment into the US, which was the intention along the way. But it's been an unprecedented wild ride, and now some of the distractions that are starting to pop up, I think. And I don't know that he's necessarily someone that takes advice, and most certainly wouldn't take advice from me, wouldn't know who I am. A bit like Kevin Rudd, he didn't know who he was either, but he got the boot, rightly so too. If you really think about it, if you focus on the domestic economy a little bit more, I think that's going to be a crucial thing for the midterms for the Republicans. So far, you haven't seen a lower cost of living for Americans, which was one of the really big things that came on the back of the election campaign. It will come, but it needs lower energy prices in the first instance, and then lower food prices secondly to that, and a stronger economy with people that can afford to have a good quality of life will ensure you get voted back in. If you don't, I think the Republicans could be in for a bit of a rough trot through this midterm that they've got to look forward to later this year, and that's something a bit more of a domestic focus and less on let's see how many world organizations we can offside in one easy week would probably be time well spent. But
well, thank you for sharing. I think it's a good mix of Trump policy meets markets meets currency. So thank you for the insights, and hopefully you've had a good laugh listening to this as well, right?
Where do you start? Where do you stop?
Crazy. It's almost comedic, but I can't complain. If markets are at record high, I'm a happy man.
I think that's the key thing, is to focus on the prize, and that is the key thing for us is absolute return for our investors.
That's it.
That is always the goal. How we get there, it's been a crazy year, and it's been one that a lot of people have been very offsided because it's a very divisive subject. Irrespective of which leader in which country you're talking about, that you're going to be in a fairly divided thing. The bigger issue for the US, of course, is that the global impact that their leadership has around the world, as we've discussed with the likes of Venezuela, Iran, Greenland, NATO, the United Nations, China, they do cover the globe, and hence why they are the global superpower. And if they focus on their own economy, they've got every opportunity to remain the global superpower for the next 20, 30 years. And if they get too caught up in stuff that's away and can't focus on that internal economic policy agenda, they might struggle.
Yep. AB, thank you very much for sharing.
Absolute pleasure.
Appreciate it.
Anytime. There you have it, guys. Make sure you like, comment, subscribe. Most importantly, hit the notification button, and we'll look forward to seeing you next week.